Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level for the next day along with a stock future trade that we take near the market closing. However, since the past couple of days the market movement has been quite volatile, so that's the only reason we have not been taking any sort of any particular future trade. So let us analyze the Nifty and Bank Nifty, their important level and the indicative volatility which the market is expecting. So option activity range for the Nifty comes to about 10,000 to 11,500. So 1000 points on upside and 500 points of downside did suggest that the volatility might be pushing the market on the higher side only. However, the call chart data reveals the entirely different picture, because what I can see is the maximum change in open interest in terms of change in strike price has happened near 11,000 100. So market participants are expecting that the market will broadly stay below 11,100 in this particular series. So close to 30 lakhs shares have been added. So market can go down as of now. The call data that suggests that the 11,100 is the level at which the market participants are expecting a stable to down move. So uh, however, on the higher side, what I can see is 11,400 to 11,150. There has been a fresh creation of bullish position, but what we are going to do is we are going to look at the strike prices with major change in open interest and the negation. So 11,100 is suggesting a stable to bearish sort of move. Then 11,000 again a stable to bearish sort of move, and then there is not much change in open interest. So all in all, the option chart data suggests that the market participants are expecting a stable to bearish kind of move. Now if you see the put data, what you can see is there has been some sort of bearish position which is creating on a lower strike prices, but all in all the put shorts are continuously getting covered. So uh, to analyze the option chart data or to conclude the option chart data, what I can see is 11,100 is the level at which the market can go down if this down move continues. However, the market has seen a good sort of upling. So as you can see, the market has seen a good opening and faced resistance near 55 days exponential moving average, closed down and taken support near its 89 days exponential moving average. As you can see how beautifully the exponential moving averages behaves as a support. So it came down, received some sort of rejection, and finally the indices were able to close slightly higher than its 89 days exponential moving average, but below its 55 days exponential moving average. So all in all, it did suggest an uncertain sort of pattern for the Nifty, and the mostly you will see that it will trade near in a broadly range of 10,590 to 10,446. Anywhere the range breaks, you can definitely expect next moving average being targeted. So till the time that happens, we are not going to take any particular trade, rather than apart from we are only going to watch the market. As you can see, support did exist near the lower level, but we need a confirmation and we need a break of 10,592 to confirm the long move and close below 89 days exponential moving average, which comes to around 10,446 or 10,450. Break below this particular level can take market down further. Now if you see the technical indicator, CCI has been receiving some sort of support near the lower level. RSI is also acting or generating support near its previous resistance level. So I have explained to you in my previous video that this particular level has been good support for the market. I have also explained to you the reason why we have not gone long in this particular kind of market. So considering the crucial levels, if someone has gone long into this particular level, they might have generated good gains because the market has opened quite nicely up. Now from here we need to watch out for the range break, and then only we are going to decide as to which side of the market we are going to take a trade. MACD has also received a support near its exponential average. However, the relatively longer term MACD has broken below its exponential average. Now let us take a look at the weekly chart. So as you guys can see, the indices is still trading beyond below is 13 days exponential moving average, and right above is 21 days exponential moving average. So still there is some sort of break that which needs to be seen. However, there is a bearish crossover and the test of 34 days exponential moving average and 21 days moving average has already been done. Now the market needs to close above the 8 days exponential moving average to get the momentum on the bullish side. Till the time that happens, we are definitely going to watch, and we are not going to take a trade in a hurry. So patience, guys, patience is a very important uh, trading decision in this particular market. So that was the analysis for Nifty. Now let us quickly find out what the Bank Nifty is suggesting. So uh, let me just share the option activity range with you. So 10,000 uh, 25,000 to 26,500 is the broad option activity range for the Bank Nifty, and indicative volatility is seen fairly spread on the both sides. Now what I can see is same like Nifty, Bank Nifty has also opened quite nicely on a higher side with a support near 55 days exponential moving average. However, it did face a resistance and broke below its 55 days exponential moving average, traded near 89 days exponential moving average, generated a support and was able to close slightly above its 89 days exponential moving average. Technical indicators are suggesting a support near the lower zone, except the relatively longer term MACD, which has uh, which has been suggesting a break of its exponential line. Now, if you analyze the call data, you can see a good sort of call writing has happened near 25,600 to 26,500 kind of level. Maximum change in open interest being happened at a level of near 26,000. So it did suggest that the market participants are expecting a stable to bearish kind of move. Any gains on the higher side will be booked into unless and until the indices were able to close about 25,967, which is seen a crucial resistance for the market as of now. So you can see here as well that this particular level has been a good sort of resistance for the market in the past as well. Here you can see and observe that it has been acting as a good resistance for the market. So if you see the market was able to trade on this side and finally was able to close on this particular level, you are going to see accelerated gains on the higher side. Now let us analyze the put data. The put data is suggesting entirely opposite picture, because it has seen a put writing near the lower level, suggesting that the 25,700 will be a good sort of support, and market participants are expecting the indices to trade above that particular level. However, on a higher side, again put short covering has continued, which again suggests volatility. So entirely the picture is not yet clear, and that's the only reason we are waiting for the market to break on any particular range. So till the time that happens, we are not going to take any trade, neither in the stock future nor in the Nifty or in the Bank Nifty. We are just going to observe the market, and then only we are going to take and decide a trade. So till the time that happens, stay with me, learn the market, observe the market. And if you want to learn our system based on which we place a trade, you can definitely check out the description of this video, where you can get the complete playlist very sequentially placed, so that you can understand and grasp the market knowledge. So if you have any doubt, you can always mention in the comment section of the video. And if you find this video helpful, make sure you hit the like button, subscribe to my channel to get the more of such content on a daily basis. And if you want to get my uploads on a daily basis, get notification of my upload, make sure you press the bell icon. So I see you in the next video. Till time, don't hurry in the market, hurry to trade in the market. Just observe until the time you get the feel of the market, or you feel that the comfortable, that the now the support has been holding, or the resistance has been prevailing. Don't jump your gun and wait and observe the market. So that's the advice for you, and with this advice, I'll see you in the next video. Thank you.